So in this video, I want to share a strategy or a idea rather of how you can really catch the bottoms or the lows of a market. So you buy here and sell here and then sell here and then take profit here, so how you can basically always catch the lows and the highs of a market with 9 out of 10 accuracy. And I will show you this with proof. Now, I want to add that this strategy is not easy. It's not something that you will look at and you finish watching this video and every time you're catching the lows and every time you're catching the highs. This strategy is nuanced and it requires a certain amount of technical and fundamental knowledge before you can see the actual results of this strategy, right? So it's a strategy that I use and I have caught the lows and the highs of markets with multiple times, right? So I know for a fact that this works. So with that being said, let's get into the strategy. So this strategy revolves around the commitment of traders report, and this is something that you're probably familiar with, right? You've probably heard it already, but as I said, it's something that it's not a one size fits all. It's nuanced, and you can have two different people who are looking at the same data, but one has a better analysis using the commitment of traders report than the other, right? So the commitment of traders report, this is what this strategy revolves around. And if you truly have a good technical and fundamental understanding of the market, this right here is a game changer, right? So the software that I'm using, if you're curious, is Prime Market Terminal. In my opinion, it's the best software for analyzing commitment of traders report. It has a lot more features, but this is one of my favorite features. So if you want to get this software, you can use the link in the description or the link in the comments. Now, if you want to use this for free, right? If you want to look at the commitment of traders report for free, you can go on this website called Bar Chart. Right, you can go on this website called Bar Chart. You go to futures. You can look at the legacy report or the financial TFF report. So I use the financial TFF report because with backtesting I realized that that is better. Then you click this drop box here. You go to asset managers, institutional, and you can analyze the detailed report and you can analyze the summary report. So you can go on this website, mess around with it and understand what it is and analyze COT data using this website, right? Before I had Prime Market Terminal, this is the website that I used to use, but as I said, it's just not as good as Prime Market Terminal. So yeah, you can use it for free on this website and so forth, right? But in this video, I'll be using Prime Market Terminal. Now, with this strategy, I am going to show you that these guys right here, asset manager and institutional traders from the commitment of traders report, these guys literally 90% of the time, when they start buying, the market starts going up. And when they start selling, the market starts going down. Literally. And as I said, you can backtest this yourself and you can look at the data. I will be showing you some of it in the video, but you can look at the data and see that these guys are 90% of the times they always start buying at the bottom and always start selling at the top, right? So you can backtest this data. If you have Prime Market Terminal, you can just click this right here, the settings icon, and you can click all and you can backtest all of the data all the way from 2006, right? So you can backtest this yourself to see that these guys are legit. Basically, these guys are legit, right? So the commitment of traders report, I don't know if I mentioned it, but they're basically institutional traders. They're required to publicize their positioning every week. So as traders, you can look at how they're positioning and follow their position. But enough talking, let's get into the back testing, right? So right here, the main focus of this page that I'll be explaining is the dollar index, right? So you need to focus on the COT history chart right here. This is the main focus, and we'll just do some quick back testing just to show you that these guys are actually I don't know. Maybe they're the one moving the market. Like, that's my only explanation, because every time they buy, the market goes up, and every time they sell, the market goes down. So they have to be the ones moving the markets, right? So let's do a simple analysis here. So we can see that institutional traders, right, since March of 2024 on the US dollar, they have been buying, right? But they started to basically get a bit skeptical on the 9th of April to throughout April. They were a bit skeptical, so they were building longs, and then they stopped for a bit. They were like, something sketchy is going on here. So if you were a trader, you could have been looking at this as well and see that, remember, every time these guys sell, the market goes down. Every time they buy, the market goes up. So if you saw that they were building longs and then they suddenly stopped, this would give you a sign to be a bit more cautious, right? This should make you second guess what's happening in the markets. So if you look at from the 7th of May right here, right, they were building longs, then they stopped building longs on the 9th of April. If we look at the dollar index here, we can see that on the 9th of April, on the 9th of April 2024, right, this is where they stopped building longs and started to build shorts. Now the market went up a bit since this date, right? But if you look at the chart, the market topped out. So they started to stop build longs on the 9th of April all the way to the 21st of May. They were just basically cautious, right? And the market topped out and basically started to move sideways, right? Which is exactly what they were doing. So they weren't selling aggressively, but they also weren't buying. So we saw the markets doing a lot of sideways movement. When did they start to sell? They started to sell or reduce their positions a lot more on the 11th of June. So from the 4th of June to the 11th of June, they started to reduce their positions, as you can see here. So let's look what happened from the 11th of June. 11th of June was right here. So they started to reduce their positions a bit here, and as you can see, the market went up a bit, still did not break this high here, but it went up a bit, right? And then they really started on the 9th of July. We can see that they did a bit more buying here, but on the 9th of July, this was the start of an aggressive sell-off. So they started, since the 9th of July, they really started to get suspicious, right? So let's look what happened on the 9th of July. The 9th of July was here. So they from the 2nd of July, which is here, to here, they started selling, and we saw the markets going down. Then they really started to sell aggressively all the way down to October 1. So you can clearly see that their selling increased a lot. And what happened in the dollar? The dollar started to sell a lot, right? So exactly how these guys were positioning, that's exactly how the market was moving. As I said, it's actually scary. My only explanation is that they're the ones moving the markets. They're basically always on the right side of the markets. And look at this, which is even more scary. They stopped selling on the 1st of October. So from the 1st of October to the 8th of October, they stopped selling, started to buy. Let's look what happened from the 1st of October, which is right here, when they started to buy. When they started to buy, the markets literally started going up, and as you can see, it was aggressive buying. So we were in the red, then we started to buy aggressively, and what happened? The markets went up aggressively. So these guys are basically, I'm just gonna call them the market makers, because they have to be. Now, currently, as of this recording, right, what do we see here? So I'm going to use this now in real time. So we can see that the dollar, it basically topped out on the 7th of January. So they were building longs, then they started to get a bit suspicious. So on the 7th of January, And this is now 2025. This is like a month ago, right? They started to stop build longs and they actually started to reduce a bit. They haven't reduced aggressively, but they are reducing their longs a bit. What happened with the dollar on the 7th of January? No, on the 14th of January to the 21st of January. So on the 14th of January, which is right here, when literally the top, right here when they started, you can see they started to reduce their positions. What happened? The market started going down. Now this huge gap up right here, if you're following this, was because of the Trump announcement on Mexico and Canada and China tariffs. So it went up, but we can see that we're still going down. So right now we're looking at the dollar and this could be a top. We could be experiencing something like this at the moment where we see some selling of the dollar all the way back down here. So this is what we could be seeing right now, right? Things can change, news can happen, but at the moment we're seeing institutional money, they're getting a bit skeptical about their dollar longs, right? So, and that's exactly what we're seeing now. No, it doesn't mean that they're short. They're still long. As you can see, these in the green mean that they're long. If it's in the red, it means that they're short. So they're still very long, right? But they're reducing their longs. And you can see that the markets is basically following. That's all I can say. The markets are just following what these guys are doing. And again, you can backtest this. You can look at all of this data from 2000 and 2007. You can see that these guys are basically always on the right side of the market. I'll just look at one more. We look at the yen. Again, if you were following this up, right, we can see that the markets on the Japanese yen index, it bottomed out, or they started from the 2nd of July to the 9th of July. They started to build longs, right? So they started to build longs on the 2nd of July to the 9th of July. Let's look what happened there. So on the 2nd of July, which is right here, to the 9th of July, they stopped selling and started buying. The 9th of July is right here. So in this period, this is where institutional money stopped selling and started buying. What happened? The yen went up a massive 15%. And that's literally what happened here. So from the 2nd to the 9th, they stopped selling, started buying. The market stopped selling and started buying, right? So these guys, and look, the market topped out, and see that on the 17th of September, this is when, on the 17th of September, this would be right here. So on the 17th of September, right, they basically stopped building longs and started to build shorts. And what happened? The market went down. So the moment they started to reduce their positions is the moment the market started to sell. So I mean, you can look at this yourself. You can look at it for the pound. You can look at it for Canadian dollar. You can look at it for every currency. These guys, literally 9 out of 10 times, they catch the bottom and they catch the top. Now, as I said, looking at this, so this data is delayed. It's delayed by 3 days. So their positions are made on the Tuesday of the week. So the data that you're seeing is actually released on the Tuesday of the week, but it is released to the public on Friday. So this data is delayed. But if you're a swing trader, that doesn't really matter, right? Because it's long-term positioning. So if you're a swing trader, that doesn't really matter. And the reason why I said this isn't like a holy grail where you can just look at this chart and do the same thing that they're doing. Sure, you could do that, but you probably won't be profitable over the long run doing that. Because what if here you saw them increase in longs here, so you bought? You would have bought here, but they were actually reducing shorts, right? But they started reducing. So you use the COT data in combination with fundamental analysis and technical analysis as well, right? So you look at the charts, you see that COT institutional money is reducing positions. You ask yourself the question, why are they reducing positions? What's moving the markets? What are the current headline macroeconomic data looking like? What are the narratives that are moving the markets right now? So you ask all of those questions and you answer them. And if you look at the macroeconomic data and the narratives that's currently moving the markets, and you think that may result in the market going down, then you can sell. And then the COT data that is released will probably confirm that. It will probably show you that, okay, you made a good call, right? And if they continue reduce their positions, for example, you are short and you are seeing that COT data is also short, that would be a sign that, hey, you need to hold on to that position because we may be forming a high in the market. And if you bought and you see that COT data is buying, this could be a sign that, hey, you need to hold on to your position because the markets may probably forming a low and it may be going up, right? So that's how you can use the COT data and incorporate it in your trading, right? So this feature right here of prime market terminal is my favorite feature, and I basically use it every Friday. It is released. I look at it, I analyze it. Sometimes I look at it on Sunday. I basically use this feature. It's probably my second most used feature on this software, right? You have this table here. I won't explain all of this because the main point of this video was just to give you an idea of the strategy, right? So I won't explain all of this. I won't explain the open interest, but these are things that I also use in the strategy. But the main thing right here is this, right? Their net positioning. So I hope you enjoyed this video. I hope you learned something from it. I hope you start analyzing COT data and incorporating it in your strategy. If you do, leave a like, subscribe. Remember, if you want to purchase this software, use the link in the description or the link in the comments. Peace and trade safe.